What's up guys, Garrett here, and today is part 9 of my series of how I mortgaged my house to buy stocks. And it's a special one for me because I've been doing this now for 1 whole year, and that's the whole intent of this video, is to share where am I and how do all of the numbers add up after that 1 year. So why would I do something like this? Well, I came to the conclusion that I had way too much money tied up into my house. It was worth about $600,000, and I don't live on a coast. I'm in Kansas. Our home values do fluctuate up and down, but at a far lower rate than the coasts do. So I'm not going to see huge amounts of appreciation in really short periods of time. So again, $600,000 locked up into that house. It kind of makes sense to put some of that to work. So I chose to take out a mortgage. I got a hold of my credit union and took out a $200,000 mortgage on that house. So it's a 30-year fixed rate loan at 3.125%. That gives me a monthly mortgage payment of $856.75. Well, like I said, I need to invest this, and the whole intent of this was to take that money and put it into the market, get it working for me with the intent that it's going to make those mortgage payments, and at the end of that 30-year term, it should have some sort of residual value to it. And that's exactly what I've been doing. I went ahead and started getting common stock, preferred stock, as well as baby bonds. The average of everything that I'm buying needs to be above about 5.25%, because that 5.25% covers what that mortgage payment is. So if it's above that percentage, as far as the average goes, that means I'm making my mortgage payment. And here are all of the stocks that I have so far. This last month, I actually didn't buy anything, so nothing really changed. The only one thing that did change was I'm also taking some of this money and putting it into alternative investments, one of those being Ground Floor. It's a real estate crowdfunding company that helps match investors with flippers to get their projects fully funded. So I invested $15,000 into a Ground Floor 1-year note at 8%. So at the end of that, it should have given me about $1,200. Well, it turns out it was actually a little bit less, because when they issue those notes, if you're there on day one and you get your money in, you're going to get that full amount. Well, I was about 3.5 weeks late on getting my money in, so I ended up with about $1,120 some that I got out of that. But regardless, it's a really good rate and a great place to put my money, at least for a relatively short term. Well, like I said, I invested that back in June. Here it is, June 2021, and it came due. They paid me everything back, and therefore that investment is basically done. I did recently also put in a $25,000 investment into one of their 3-month notes at 6%. And in a couple months, I'll get that back too. So up to date, I have $108,710 invested into the market, and then that $25,000 invested into Ground Floor. So that's a total of $133,710 invested so far, which represents 67.7% of my investable money. It's given me an annual dividend of $9,768. My monthly mortgage is $856.75, but the dividends, if you divide it monthly, comes out to $814.01. So I'm covering 95% of my payment at this point. All right, let's take the deep dive into all of the numbers. So yes, I took out a $200,000 mortgage, but I didn't get $200,000. I got $197,460 to use. So I was upside down to start with. And like I said before, I've been at this for a little bit over a year, but I've made 12 mortgage payments at this point. So that represents paying out $10,281 just to make those mortgage payments. So when I started this thing, I had 2 pots of money. So over here, I had what was going into my stock account. So I actually had 5 different stock accounts, and I put $25,000 a piece in them. So over here, $125,000 in those stock accounts of that, I've been buying all of those stocks. So everything that is in this pot stays in this pot, which means that all of those dividends, the interest, everything that I have there, the stocks, the dividends, the interest, the cash, it's all over here, and it's what I'm making my investments out of. I'm just letting it grow. This other pot over here is basically the cash side of it. So I had to keep some cash out so that I could pay that mortgage payment, but I'm also using it, that's what I'm putting into the ground floor investments, and like I said, any sort of alternative investment. Once this stock side gets fully funded, and when I say that, when every single dollar of it gets put into stocks, then I'll take some more of this cash over here and put it into that side of thing. But again, the stock side, I have not withdrawn anything from it. So I started with $125,000 and I looked today, this morning, and the total value of all of that is $143,214.93, which is obviously more than $125,000 that I put into it. So yay. But remember, I have this cash side over here, of which is getting drawn down because I'm making that payment. So I put the $125,000 in that side, and I had everything else that was on this side. So that represented $72,460 and some change. I did have that ground floor payout, and the interest on that was $1,123 and some change. So the two of those added together was $73,584. And like I said, I've made payments of $10,281. So you subtract the two of those, it gives me what cash I have left. So that means that I have $63,303 left on that cash side of things, of which $25,000 of that is in the ground floor investment at the moment. So if you add that $63,000 that's over here and that $143,000 valuation of all of the stocks and everything, it comes out to $206,518.02. So the good news is my total valuation of that entire portfolio is higher than what I owe. I started out owing $200,000, but like I said, I've been paying that down for 12 months, which means that the principal owed on that is less. It's down to $195,911. So if I liquidated everything right now, paid off that mortgage, I'd be about $10,500 ahead. And of course, that does not take into account any of the tax ramifications of it. There's going to be some long-term as well as short-term capital gains, and of course the dividends and the interest. But realistically, those are going to be fairly small, so I'd easily be able to cover that and still walk away. So up to this point, this whole thing has been a success. And you're probably wondering, hey, you started this a year ago and the stock market's just gone bonkers since then. Why isn't it worth more? Well, the main reason is I've been slowly incorporating that money into the market as time has gone on. I guess you could say dollar cost averaging. With that said, if I could go back, if I knew what I knew now, obviously I'd dump everything in way back there and I'd probably be up, I don't know, 50, 60, 75%, because all of the stocks that I bought in that May to June timeline are up hugely right now. But of course I didn't. I did it over time, and that's fine regardless. The whole thing is above what it needs to be, and I'm under no illusion that it's going to stay up at that point. You know, it's all dependent upon the market valuation, and that fluctuates over time. Well, this is a long-term play, and I'm not even fully invested in everything. So far, I've only invested about 2/3 of that money, meaning that I still have 1/3 to invest at this point. So thank you guys for watching. Make sure to hit that like button down below as well as subscribe. I'll see you guys next time.